you got the email from Satoshi. Tell us, what was that like when you read it for the first time? All right, everyone, welcome back to Bitcoin is Hard. This is a Choice App production about Bitcoin and personal finance. Today, I'm super excited for our guest, Bryan Bishop, who's a Bitcoin core contributor and has seen the inside of a lot of very big like finance, crypto organizations. And so today, I just want to talk to him about what it's like being a core contributor, and then kind of as Bitcoiners are thinking about the personal finances, just any insights we can gain from him on kind of how these, institutions work. And so, Bryan, kick off on this. You got the white paper email from Satoshi. What was that like when you read it for the first time?
Yeah, so I was very fortunate. I was 19 years old. It was 2009. And I received an email January 10th, 2009, announcing Bitcoin, the software release of Bitcoin. Now, as those might know, 2008 was the release of one of the versions of the white paper. 2009, January, was when the software was released. And I received an email actually from Eugene Lietl, who was a prominent figure in the transhumanist community and somewhat from the cypherpunk side of things, forwarding along Satoshi's email to another mailing list that I was on. And then I also received an email from Satoshi through the Peer-to-Peer Foundation mailing list in February 2009 when he announced Bitcoin second or third time. And so in January, when I looked at it, I looked at it, and I was 19 years old, and it was just after the 2008 financial crisis, and I was looking at this, and I was like, "This is a piece of garbage." I mean, first of all, it only runs on Microsoft Windows, and you can't have a financial revolution if you only run on Windows. And it turns out Bitcoin fixed that over time. That was not actually an issue. But the interesting thing at the time was that 2007, 2008 was a period where there were a lot of proposals floating around for alternative currencies. And so, from my perspective at the time, Bitcoin was actually just another player entering that field. And the problem was that many of those other proposals, save for what is now called RumplePay, actually had no software implementation. Really, they were like timeshares or other weird things. And yeah, I just didn't like the concept of money. I just thought it was stupid. Like green pieces of paper that you're trading around, and like can be traded for goods and services. Is just like it just seems absurd. Why would we denote any value to green pieces of paper? So what got me into Bitcoin later on in about 2013 was I realized there is actually code involved here, and I talked with some of the Bitcoin developers, and I realized these were my people, and I was thinking, well, I'm good at code. I understand this. This makes a lot more sense than any other financial technology at the moment. And so that's how I got involved in Bitcoin.
Talk to us about these mailing lists, because I actually love the way you described that, and I hadn't thought about this before. So, okay, so in 2009, when I was hanging out on MySpace and Facebook, like chatting with people, there were mailing lists, and there were different kinds of mailing lists. So the same way there's groups that develop online right now around any sort of thing, and people chat about them. I hadn't even thought about that. So Satoshi himself went and spread it to a couple lists, and then other people would effectively retweet it or like repost it to another list. And then you talked about, yes, the difference between when he released the white paper to the, like, what was the name, or is there a name of like that list where he did the white paper release to? Like,
I believe the white paper list was released to Perry Metzger's cryptography mailing list in 2008. And then I believe there were subsequent emails from Satoshi on that mailing list, I think. And then the software release was also there. And then on the peer-to-peer foundation mailing list, which was ran by Michelle Bowens at the time, and I think still is, uh, it was February, so it was both software and I think also a link to the white paper.
and what would these people do? So then if you're reading it either on the original list or one of these reposted lists, when we hear about these like early CPU miners, what were they doing? They were clicking on the file, like downloading Bitcoin Core to their machine and just hitting open? Or like what did that look like off of those initial emails?
Oh, for the initial users of Bitcoin, yeah. I mean, there was a link to the website. They would click the link to the website. They'd load the page, and they'd see software. They'd download it, and then if you were running Windows, you could run the software. And early on, largely, a lot of developers were mainly interested, And so compiling the code was, another option as well, once that was released on SourceForge or something.
Yeah, and you talked about how as soon as kind of the software element, or you realize that, hey, there is software behind this, not just a proposal, looks like it's gaining traction. Your confidence in it grew, or your interest in it. You're like, oh, there's something here, grew. The other thing I wanted to ask you about that's hard for, I think some people to envision, is the way that like Bitcoin improvement proposals work. So is there a fast version of like your initial thoughts on the software to like today? Like, what's the super fast version of that? Of just like explain to us the way that Bitcoin gets built.
Well, Bitcoin gets built by essentially a team of volunteers that are loosely, not even associated really, but they just, choose to work together from time to time to review each other's code, look at pull requests, and then in the Bitcoin Core node and wallet implementation, there are a few maintainers that will merge code periodically from contributors, depending on whether there is a wide community support for that particular change. Changes that involve perhaps the wallet or networking layer are sometimes simpler to make because there's less downstream effects of making changes there. But changes on the consensus side regarding how do you validate a transaction and making something that was once valid now invalid, or making something that was once invalid now valid, becomes a much more difficult change. And that's called a consensus change. The Bitcoin improvement proposals, or BIPs, were one way of organizing everyone to have a standard place to check for these proposals as they matured. And so, for making proposals and updates to Bitcoin, other than just source code changes, especially other than minor changes, you go through BIPs. And the way that BIPs work is specified in BIPs 1 and 2. And essentially, the champion of an idea says, hey, I have an idea. And he goes and talks to various people. He brings it forward to the mailing list and says, hey, who would be interested in this? What do you guys think? You collect feedback. And eventually, as the idea matures and an implementation is decided upon, or a reference implementation is made to support this concept of whatever the improvement or proposal is, then it can become a BIP. And the BIP, I mean, it's not a standards body. A BIP is really just reference material. It's informational, and people can collaborate on those. And eventually, there might be a pull request in Bitcoin Core to implement that, or but not necessarily all standards need to be implemented in Bitcoin Core. So that's
Mm-hmm.
also helpful.
Right. And so I want to ask two questions. I want to ask you about just your reaction to kind of the common phrase that we hear a lot of, like, well, it's like, it's hard to improve Bitcoin, or it's hard to improve Bitcoin, or Bitcoin's not, innovating or whatever. I want to get your reaction to that. And then I also want to get your reaction to how does, like, you and a lot of others you've worked on the volunteer side of like volunteering for like working on Bitcoin Core and just doing it as an open source project. And then you're also like, because of the success of the Bitcoin open source project, you're also like a highly sought after like professional now on the like commercial side of software. So whichever of those you want to tackle first, of just how does commercial software and open source software like work together? And then what's your reaction to just kind of when people say like, Bitcoin is like old and slow and not improving?
Well, I would say that Bitcoin is somewhat slow in development terms. For things that get widely deployed, it does take a while. But at the same time, I would also point out that there's a lot of really interesting work that goes on in Bitcoin that most people never hear about. For example, one of the shining gems of Bitcoin, in my opinion, is a library called libsecp 256k1, which is a cryptographic library that was developed specifically for Bitcoin that can do transaction signing and validation. And it actually replaced what was previously used called OpenSSL in Bitcoin Core. And the level of engineering prowess and just the high principled way that the code was written in libsecp is really quite impressive. I mean, the level of mutation testing and just so many tricks were thrown out to make this code work well, and have minimum number or no side channels as much as possible. Is just the whole way that project was approached is really a shining example of of cryptography for basically every project everywhere, in my opinion. And so when you really dig down into it, there are interesting areas of development that Bitcoin is going down. I mean, one other really interesting one is reproducible deterministic builds. With the Gideon project, Bitcoin helped push that along because we needed a way to do reproducible distributed builds where everyone would take the same source code and end up with the same binaries. The downloadable, clickable binaries need to be made the exact same way so that if there's one difference in one and another difference in another, you can detect that. So that's a very, very critical part of it. Now, when it comes to the commercial side, I would say the story and situation has really improved recently with the proliferation of developer grants from companies to support open source software development in Bitcoin and other cryptocurrencies even. And so that's been really nice to see, and I'm a full supporter of that. I think it's great to get developers to have those grants where it's not even really a corporate pressure sort of thing where the corporation is trying to get their pet feature in or something. It's really just funding these volunteers. So that's great. But on the other hand, I would also say that the open source free software mode of development through volunteers contributing their time and resources is very different from commercial software development. And yeah, not a lot of people know, but before Bitcoin, I had experience in commercial software development outside of open source. I was actually, early 2010s, I was a web developer. I was doing web applications. And so my experience was on that side of things. And, I got more involved in Bitcoin and learned more about cryptography and this software stack, consensus, distributed systems, all sorts of things. Um, and yeah, I mean, it's definitely a challenge sometimes bridging the two worlds because from the perspective of like SaaS tech startups, that are doing software as a service or something, they think of it as, oh, Bitcoin, okay, what's the service provider that we integrate with, and we're done.
Mm-hmm.
Like it's like,
Mm-hmm.
okay, what API
Mm-hmm.
are we going to pay for, and we're done. And it's like, well, it's not really that easy. There's all these different aspects you have to consider, and that makes it certainly interesting.
That's
Going
why I thought, to put a specific on that, that's why I thought it was very interesting when Tesla went and just put BTC Pay Server like in their checkout flow. Like that's why that was so interesting at the time. And they were like replying with ways to improve BTC Pay Server, which I understand it's not Bitcoin Core, but that's still a very cool example to see of, instead of going with a provider like that route, they just did go and download what was available.
Yeah, I mean, BTC Pay Server has certainly made it pretty easy to go and install your own payment processor. And I think on the back end, you can even tell it to go like do trades or something with your own accounts at exchanges. It's really interesting. Yeah.
When did you feel that? So when I've talked to others also that have been involved, like as long as you have, there's a lot of like, wow, like it's made it this far, like just kind of feeling. Do you have that, or like when did you feel like, wow, Bitcoin is going to be really really big and kind of, yeah.
Oh, almost immediately. I didn't have any question. Bitcoin is such an interesting project. There's just so many different layers of technology here, and the complexity of how it's put together, and the choices of why it's put together in that particular way. In some cases, are more a matter of lore at this point, but it's really quite interesting that it even works at all. Yeah.
I so okay, I like your word lore, and because I want to all so I'm very interested in just getting your very general reactions about just what it was like being the co-founder of like Avanti, now Custodia, and just your work with FTX and things like that, because there is a lot of lore around Bitcoin of the like, be your own bank, don't trust verify, like those kind of things in it. And very often in just kind of the most basic of basic Twitter days, it feels like both those concepts like are at odds with each other, of just like, Bitcoin's becoming financialized, Bitcoin's becoming co-opted or whatever, all those like general statements. What is it like working at Vayner? Like you've been as much a part of the open source, like you've just been such a part of the open source story, but you've been such a part of like the commercial like story also. That's like, you have to have a
So
lot of thoughts about that middle.
Yeah, I mean, I would say you've cut to the issue directly. In 2014, when I joined LedgerX, it was a startup that, recently started, and they wanted to be the first federally regulated Bitcoin options exchange, derivatives exchange clearinghouse. And, I was looking at this opportunity, and I had a few thoughts going on in my head. One was that if Bitcoin is going to continue and it's going to be widely adopted, then I believe that it will be regulated in some capacity. I believe that in order to get these digital bearer assets in as many hands as possible, it's going to have to go through public infrastructure, public markets, and get regulated. My concern was if I was not involved, it may be the case that the regulatory approach that develops may be counter to the goals of privacy and freedom that we're all interested in with a hard bearer asset like Bitcoin. And so part of my motivation, besides just pure greed, was making sure that that these regulated entities are making good proposals to regulators, and that there is a good passageway of ideas between this sort of free market crypto wild west ideology and this whole regulated ideology. And to be honest, the two ideologies are quite at odds from time to time. Um, and I believe it's important, though, to speak both languages, because if we want to convince the enemy of the value of freedom and privacy for human flourishing, you have to speak on both sides. You can't just make the argument from one side or the other. And yeah, so anyway, that's why I got into regulated fintech, and so that was LedgerX. They got acquired last year by FTX US, and yeah, started a bank with Caitlin Long called Custodia. Previously, it was Avanti out in Wyoming in 2020. And the idea there was the same thing. I did this once with a federally regulated options exchange. Let's do it for banking too. We all know it's time for banking to get disrupted, and there has to be a regulated vehicle to do that.
Yeah. So in that understanding both languages, something that I think is interesting is that if you sit down one-on-one with anyone who works in like regulated markets and explain this is what Bitcoin is, this is the ideals of Bitcoin, this is how it's better than the current entrenched system or whatever. Most of the time, I feel like a one-on-one conversation, they'll agree with you. Like they'll agree, like the ideals and the aspiration, like totally same page. And what I think happens is a lot of times, speaking in generalities, people might not believe that like, oh, it can, like, they're not optimistic about that future being possible. And so they're like, this is as good as it will ever get. Yes, there's frustrating bureaucracy. Yes, there is all this stuff, but such and such, like, we need this and blah, 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 blah. And here's all the reasons, like, why it won't work. And like, what I think is interesting is that more and more people like you are just changing, like one thing at a time, being like, nope, solve that objection. Nope, solve that objection. Nope, solve that. And it's like,
Yeah, I would say this comes from a belief that, I mean, yeah, there are political things that you can change, and you do political action to change things. But another way to change how the world works is to invent a new thing, to build technology that does something better than was previously done before. And there's a little bit of an element of, don't ask for permission, ask for forgiveness, or it's easier to ask for forgiveness than to ask for permission. Um, and that plays into it a little bit.
yeah, what the people people that are building like so I was going to ask about, yes, what we're seeing is we're seeing cryptocurrency exchanges become banks, and we're seeing banks become cryptocurrency exchanges. And so you have everyone is on, like, for every person like you who came from cryptography and then joined regulated fintech, as you said, I like both those words. There's everyone who spent their entire career in regulated fintech and then is now bridging over or whatever, and for the same thing of like, oh, that we can see the ideals and we can build this thing. What do you and so I guess, and you've kind of already led to it, like, you believe that the ideals of Bitcoin are still intact. Like, but do you believe the ideals of Bitcoin are still just fully intact? And like, I guess, Like, is the revolution on time and on budget?
Oh, I would say so. I mean, Bitcoin still exists. It still does what, what it's capable of doing. And I don't think that there's much that can change that. What could change is how governments react to it and what businesses are allowed to do. But I mean, largely though, from an individual point of view, the tool of Bitcoin is still, available. And I just hope that as there becomes more regulation around how businesses play in the financial markets when it comes to cryptocurrency, that we remember the values that we started with, which were, freedom, privacy, hard money, stuff like that.
Mm-hmm. Yeah. What do you think about what's your take on like Web3, Web4, Web5? Like
Oh,
what?
I lost count a long time ago. Oh man. Uh, I guess I haven't found any particular utility for myself in those Web3 and plus. Um, yeah, like in Web5, that is decentralized identity did stuff. There's certainly some good standards coming online for that, but again, though, I mean, in the work that I've done, I haven't found a common use case really to do that. I mean, I still get headaches thinking about Web of Trust and how originally we had an attempt at Web of Trust with PGP and GPG, and that kind of isn't used anymore, and it's considered to be failed. And so at the end of the day, you are going to need something like a Web of Trust. I don't know. I don't know. Key management is hard, and then you have key revocation, and it's difficult.
Is the digital identity stuff connected to any of the like issues that like regulated fintech has with crypto at all? Is it connected?
Well, it's somewhat connected. It comes from a root problem in cryptocurrency and security in general, where if you want to send Bitcoin to someone, you have to get their address. So they send you their address. Well, the problem is that when you're signing a Bitcoin transaction, how do you know that you're signing a transaction that is spending to the right address? So, you say, well, I asked my friend and he told me the address, that should be the end of it. Well, unfortunately, it's not. And there's so many different ways an attacker could disrupt that situation. One is that, the attacker could intercept your communication with your friend and you get a different address. And another way is like your friend might be going to their own wallet and getting an address, or even going to their exchange and saying get new deposit address. But in 2014, there was this famous Dogecoin exchange that had this huge hack where the deposit addresses were all changed by an attacker. And when they were depositing Dogecoin into the exchange, they were giving it to the attacker. And so your friend's like, oh, this is my address. My exchange says this is my address. Here you go. Please pay this. And you pay it, and it doesn't get there. And so all of these problems are related to security, how to establish secure channels. And then once you have a secure channel established, what happens if your friend on the other end has his key stolen by an attacker, and you think you're talking over a secure channel and you're not. And so you end up with this wrong address problem. And that's somewhat related to the decentralized identity problems. And it has the same issues, which is if you have a key that is defining your identity and you have maybe these credentials, verifiable credentials and otherwise, you have to protect the key. It has to be secure. There has to be key revocation and all those other functions that make up decentralized identities. Um, and so to me, I consider that to be a little bit of an unsolved problem. In practice, the certificate authority system that protects websites with HTTPS largely, which protects, by the way, hundreds of billions of dollars of transactions every year in e-commerce, uh, goes a pretty far way to protecting most users. But there are all sorts of edge cases where they might have malware on either your side or their side, where things get a little murky. And I think about that problem a lot.
Mm-hmm. What do you think about the current landscape or I should ask, I was going to say, what do you think about the current landscape of Bitcoin sidechains? The precursor to that question, what is a sidechain and what is a layer two? Do you use those words interchangeably or do they mean something different?
Well, there's a few different definitions that are floating around. For a sidechain, the original definition that I was familiar with was the concept of a chain that the Bitcoin miners would also be responsible for mining and including attestations or commitments to the state of the sidechain in the Bitcoin blockchain to some extent. and then the nodes would have to validate those rules as well. And so that would be a sidechain. It would be this extra area where different activity can occur. And in fact, that's from that concept came other ideas like extension blocks and even weird variations that I can hardly remember now, but stuff like if you want to look into something fun, there's like evil soft fork extension blocks and other names for wild ideas. So that was the original idea of sidechain that I was familiar with. And then layer two, I would say, really refers to protocols that use the existing primitives on the base layer to achieve some sort of new functionality. In the case of Lightning, that is multi-party escrow, multi-party custody of a coin, and establishing bilateral channels, and then turning that into a network of channels where you can do hops between different parties. Um, Now, in practice with sidechains, perhaps the most prominent sidechain is Liquid. It's the Liquid sidechain. And that one is a little bit different, actually, in that the way that it works is that there is actually a multi-sig federation that takes custody, or you deposit your Bitcoin to them, and then you get issued LBTC on the other side. So it's kind of like a wrapped Bitcoin,
Mm-hmm.
really. And so, is the Liquid sidechain validated by nodes on the Bitcoin network or even miners on the Bitcoin network? No. The only thing that is validated are the deposits and withdrawals into the Liquid multi-sig federation, the PEG, or the multi-sig fed, and separately, Liquid exists as a series of its own nodes somewhere out there
Mm-hmm.
on the internet, separate from Bitcoin. And what's interesting about this is that if you squint your eyes at a very high level, it actually looks really similar to how some exchanges do Bitcoin custody. Even they receive Bitcoin on the Bitcoin network, and then they have their own database, or some other system where they do trades or whatever it is they want to do. Um, and what's interesting about this is that I think it's actually quite it's quite good as a model, and even cheap. And I don't mean that in the bad way,
Mm-hmm.
because you just use multisig, on Bitcoin, and that's basically free. And so it looks like a great way to experiment to me. You lock up some coins and then go experiment and then come back later. Sounds
Yeah.
great to me. Yeah.
Yeah. And isn't it possible? So, and then isn't it possible to, you could fork Liquid and create your own Liquid network also, right? Like, so there could be multiples of these things for multiple different, groups of people.
In theory, yes. In practice, the Liquid sidechain is based off of Elements, which is
Mm-hmm.
another open source project. However, the federation for the multisig peg, I believe, is not open source from
Mm-hmm.
Blockstream. Um, and then this goes into some recent ideas that have been receiving attention, such as Fediment and Lightning service providers.
Yeah.
Um, and again, the idea is you have multi-sig and you put in coins, and
Mm-hmm.
then you can get onboarded onto Lightning or Fediment or otherwise. Yeah.
Yeah. No, and rounding out the topic, just any thoughts on like stacks, RSK, or like drive chains?
No, not in particular. I mean, for drive chains, I would say Paul Storick has been working diligently on it, and I think his work is often quite interesting and worth review.
Mm-hmm.
Um, I don't think that the original drive chain BIPs are going to be deployed anytime soon in Bitcoin Core. Uh, but other than that, I mean, it's definitely worth some attention.
Mm-hmm. And kind of combining the end user like financial institution conversation with the sidechain like conversation. Something that I've been envisioning in my head is, and this is an analogy that's working in my brain for now. You know how a store has their sticker up that says we take, Visa, MasterCard, Discover? Like I can see a situation where in the future a store could put up like we take Liquid Lightning like and Fediment or whatever. Like and then there, because like BTC Pay Server already works for taking Lightning and taking Liquid. You could even issue your own like Liquid coupon to your
I
store
think,
for a thing.
I think the long term solution there, where we're going to end up eventually,
Mm-hmm.
is you walk into a store, you make a purchase, and you're supposed to render payment. Eventually, we're going to get to the point where there's going to be universal payment bliss, where the merchant says, hey, we want to accept Bitcoin only. And then your phone figures it out and says, well, I don't have Bitcoin, I have
Mm-hmm.
something else.
Mm-hmm.
And, somehow the two are going to, somehow figure it out and come to the point where either like the merchant is like, well, I'm going to accept a zero conf transaction, or maybe there's a trusted party involved that endorses or guarantees the funds will be delivered, something. But
Mm-hmm.
this idea of like people having to, like, they have some sort of financial portfolio and they're going to a store and they want to make a purchase and they have to figure out like what particular assets do I have in common with the store is just
Mm-hmm.
absurd. That's
Mm-hmm.
absurd. Um, you can price things in a single asset, and then you can have reference and indexes against those prices to different assets. Um, and at the end of the day, it kind of doesn't matter what someone is paying with, as long as the value can be delivered and then converted into whatever format the merchant wants, or vice versa, or whatever. Um, and as long as like the security guarantees work out, where both parties understand what's going on and what's going to happen and what can go wrong, you know, that seems like ideal to me for payments. Call it universal payments or something.
Yeah. No, I definitely can see that. And that's very similar to a lot about what Jack Mallers was talking about, like at Bitcoin 2022, where he just said, like, no one has helped the merchant in 50 years, and talked about how pick your currency on this side, pick your currency on this side, and it just gets delivered.
Yeah.
What? Right. Because, and so another barrier to that right now, though, also is the kind of like these walled garden like payment processors. Like, so what's cool is that Bitcoin and crypto like payment processors are beginning to run in parallel at certain stores in certain jurisdictions. But then some of them are still walled garden of only being able to receive the Bitcoin, from a certain kind of app. So even within asset, there's still like some friction there.
Yeah, I think there's still a lot of software development that's going to be needed, and we haven't found the end all be all solution yet, and maybe there isn't one. I mean, universal payments is a nice fantasy, but in practice, though, it might not be achievable.
Mm-hmm.
So we'll see. We'll find out.
Yeah. So zooming out from that, like, what do you think about like Bitcoin is base money and like Bitcoin becoming like the reserve asset of the world, and then stable coins, like bringing in stable coins to that too? What do you think about Bitcoin backed lending also?
Well, at a high level, I'll say I think having Bitcoin be more widely proliferated would be a good thing for the economy and you know the human endeavor to figure out how to make good money and how this should work. I think Bitcoin is a very excellent contribution and should be widely adopted, and hopefully even understood. Um, so that would be nice. But I would say at a higher level, what I think is important that Bitcoin brings is really this concept coming back to the forefront of bearer assets, having digital bearer assets or any bearer assets at all, and being able to do personal finance based off of that. Instead
Mm-hmm.
of having a stock portfolio where you have these stock certificates in theory being held by someone else. And I mean, there's just so many layers when you log into your stock portfolio between what you're seeing on your screen and the actual value associated with you.
Mm-hmm.
And it's really associated with many intermediaries up the chain down to all the way back to the original issuer of the security of the stock. And all of that has to change. I think bearer assets make a whole bunch more sense. And the beautiful thing about bearer assets is that you don't have to bear them. Someone else can
Mm-hmm.
bear them for you, and that's
Totally.
where middlemen and intermediaries can come forward. But the idea that like there needs to be like this 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 predefined set of intermediaries that are of a certain regulatory structure, I think is really harmful. To the development of better forms of human capital allocation.
Yeah. Well, no, and it's frustrating as the end user, personal financing, like your budget, it's frustrating that when you go to buy a car, and if you go to buy it with the bearer asset, like we'll use dollars, for example, right now, if you go to buy the car with dollars, the actual dollars, instead of with a loan, there's rarely a price break right now. Regardless of where you go, paying credit or paying like cash, there's rarely a price break. And that's like kind of frustrating. I think that's another thing that like if like the bear asset continues to take off, I think that's another thing that we'll see change.
Interesting. I wasn't aware of that problem.
Yeah, I think that's definitely something that it solves. Talk to us about this Webcache, your Webcache product,
Oh, sure. Yeah.
webcache.org. Yeah.
Yeah. So webcache.org is a new cryptocurrency. It is proof of work based, and it's very different. And essentially, it has no blockchain. It is a central server that operates a database for the purposes of anti-double spending. But the miners mine, the Webcache tokens, and yeah, it's the culmination of my time in Bitcoin and thinking about what is actually required to make a cryptocurrency. And we're all familiar with different scalability problems in Bitcoin and so on. And really, the way to do scalability is have a central server. Now, that's of course completely the antithesis of what Bitcoin is. And so, for that reason, I'm not saying Webcache is better than Bitcoin or is a better Bitcoin than Bitcoin. In fact, just the opposite. Webcache serves a very different purpose. I think Webcache serves the purpose of payments, and it shows a way of doing decentralized proof of work mining with very, very fast payments. And what's interesting about Webcache, I mean, first of all, you can still CPU mine it, and people have been finding that pretty fun. But what's interesting about Webcache is that it's actually just really absurdly simple. In fact, to send Webcache, you can think of it for people who are more familiar with Bitcoin as kind of like sending a Bitcoin private key, and you just give the secret, and then they have the Webcache. That's how it works, and it's so fast. Even in person at like this consensus conference last week here in Austin, I was giving a whole bunch of demos on my phone because someone made a wonderful web wallet called Webcasa for Webcache, and it just works on your phone and your browser. And I was giving people demos, and all they do is they scan a QR code, they open the link, and they have a
Mm-hmm.
wallet in their browser. And people were almost, I would say, disappointed by how fast the demo was. And they were expecting something more like registration. They were expecting having to install nodes, download a blockchain.
Mm-hmm.
And no, there's nothing like that. I mean, you just get the link, you load it up, you have a browser wallet. Just kind of, if you're familiar, blockchain.com has a browser wallet, right?
Mm-hmm.
And you load it into your browser, you have your Webcache essentially. So it's been going on for a few months now. Started in January of 2022, and gotten a lot of great feedback. People really like the simplicity, and they have fun mining.
Yeah. Okay. See, so what I do with ideas like this is that what I'm doing now, and I've said this on the podcast, like I'm trying to just have 2022 be like I'm trying to leave kind of like all old baggage behind and like all my old thoughts behind and just like start fresh with just like, this is where we are right now. What does the future look like? And that's where I came up with that analogy of the like Visa, MasterCard, Discover stuff. And I love your stuff about just blissful payments and doing the conversions for everyone. One thing with like, and we've had great episodes on like Bitcoin sidechains. Say Webcache like becomes the payment standard. How have you been asked the question, or how do you think about the question of then the conversion rate between Bitcoin and between like Webcache? Like how does a free floating, like if Bitcoin becomes base money, can a free floating token be the standard for payments? I guess I think that's what it comes down to, because and there's a philosophical discussion, I think, out there, like in cryptocurrency, whether we're talking about Webcache or whether we're talking about anything different. It's like, the reason why Liquid and Lightning are easier to understand is because the sats are the sats. The reason why other payment networks or other blockchains are hard to understand for Bitcoin or for myself personally is because then you're having to balance this exchange rate between Bitcoin and the other coin. So I don't know if I teed that up well.
Well, I mean, first of all, I would say to the extent that Webcache gets adopted, it's really going to be because it's simple, easy, fast. Developers are sometimes very frustrated with decentralized blockchains,
Mm-hmm.
and just having this breath of fresh air where it's really absurdly simple. I have to say. That is why it might be adopted, right? And to that extent, merchants might adopt it, and there could be payments flying around and everything. Um, with regards to free floating and trading against, Bitcoin and other assets, that's really the job of exchanges, right?
Hmm.
Exchanges set up those markets, and there's buyers and sellers of both assets, and they figure out a price, whatever it may be. That is not my place to decide anything. Um, where I think that there's still a few questions that the whole ecosystem hasn't answered is in terms of payments. Will there be a single thing that gets universal adoption for payments? Um, maybe there is. Maybe Lightning is it. Maybe Bitcoin on Lightning is it. Maybe it's not. Um, I don't know. I think it's
Yeah.
such a broad problem though, because um, people accept these different assets. And you asked about CBDCs and stablecoins
Yep.
earlier.
Yep. Yep.
And that's another option. And to the extent that we get stable coins issued in the United States that are backed by a dollar and have a good regulatory structure, that's certainly interesting. In fact, I'm not a dollar maximalist, but I do actually believe that if the United States gets its act together with regards to stablecoins, and we have like a stablecoin issuer in the U.S., whether private or public, whatever it may be, that is well regulated, has a good structure, one for one dollars in reserve, and then it's allowed for anyone to use permissionlessly around the globe, I think that would be huge. I mean,
Hmm.
that would further cement and strengthen the dominance of the US dollar in the international markets. Everyone everywhere wants dollars. It's kind of
Hmm.
absurd to think about, like, why would you want dollars? I don't know. I don't even have a good answer for that. But nonetheless, there are
Hmm.
countries around the world with people that desperately want dollars. That's
Yep.
what they want.
Yep.
Um, it's kind of interesting. Even with Webcache, people join and they're like, "Well, is there a way to do this with Bitcoin, or is there a way to do this with dollars?"
Yep.
People want dollars.
Yep. Well, no, and that's why I'm glad we covered the side chains, and that's why I'm glad like we talked about Webcache, and that's why when I brought up the example of agree with all the benefits of bearer assets, it's frustrating that you don't receive better terms as an individual. You don't receive better terms on your purchases when you're paying with a bearer asset. If I'm paying for my groceries with an IOU on credit or paying with a bearer asset, the grocery store gives me the same price. I'm more frustrated about that than I am even about the friction or non-friction of delivering the payment. Because if I'm a responsible financial individual and I'm delivering the bearer asset to the person, I should receive a benefit for that. And the entrepreneur should be like almost like, I just feel like the incentives should be there for them to do it, which obviously they're not. Obviously, with the way the current
I
payment
think
systems.
Yeah, I think largely we've seen like discounts for pay with Bitcoin mainly from like ideological merchants.
Mm-hmm.
And the reality for most merchants is that they have built into their cost structure the fees that credit cards charge.
Mm-hmm.
And I think that for most merchants who don't have an ideological interest in like new technology and new payment methods, they kind of don't want to recompute their pricing structure for these alternative assets because they already consider this like whatever the fee is from the credit card company or whatever impacting their business. They already
Yep.
consider that, and what incentive do they have to really like raise or lower that for different? Anyway, it's complicated.
Yeah, no,
Um,
100%,
mm,
100%, which is why, so it's like when I'm envisioning the future of payments, my like base guess right now in my brain is what I explained, like the sticker that says the like here's the three side chains or L2s of the options available that are like the main ones my processor set up to take. And then all prices are still in dollars, but it's like here's the price for paying with the bearer asset, here's the price for paying with like credit. And then it's basically like if you're going to use an legacy credit option, then you're paying an increased price. It's like a gas station, like where you have the credit price for the gas and then you have the cash price for the gas. That's where I could see the intersection of the like, I'm trying to think about, that's my case for the short to medium term of where the demand for dollars is, exactly how you said, combined with the current options of side chains and open source versus commercial payment processor like software. That's like that medium term.
Stepping back for a moment, I would say one interesting player that I think might be likely to go a very long way in solving these problems is Stripe. And I think Stripe has been expanding into different areas of payments. I mean, they got into treasury recently, banking a little bit. I think it's quite easy to imagine them going into things like invoice financing and other services for merchants, where they need to like financialize their business, B2B payments, B2C payments, all sorts of things. to get more liquidity faster or to move money around faster, whether that's using stablecoins or not. I think Stripe is an interesting player that might make some moves in that area. But again, I mean, there's all sorts of other companies out there too. Yeah.
No, agreed, agreed. So, all right, our final two questions of the episode, and transitioning on the topic, you have this great tweet. A couple of people were talking about. So, I believe this. I believe the thread started in reference to the Cinder Lummis bill, talking about just de minimis exemption and commodities and different things in her terms of the bill. And this person says laws that would treat Bitcoin, a peer-to-peer electronic cash system, as a security or a commodity rather than a currency seem fundamentally hostile. Adoption by countries and by people accepting it for payments underscores that Bitcoin is a currency. And people kind of have a discussion. And then you make what I think is a good point, and I want to hear you expand on it. The security commodity distinction is kind of arbitrary. And what matters for society is going after fraud, regardless of what a thing is or isn't classified as. What do you mean by that? Talk to us about that.
Well, it sort of stems from my frustration of hearing people talk about the SEC regulating, certain coins and securities, and the CFTC regulating commodities, and there being different rules if you're a commodity or if you're a security, and what is a security? There's the Howey test, and if you squint your eyes, it sort of seems like everything's a security under the sun. Am I a security, or are you a security? I don't know. And so, these distinctions, I don't know if they actually matter. I think that the reason why we have these distinctions is mainly of a historical nature. Like, this is just how our economy developed and how we put rules around these things. And maybe it's time to, redo all these regulations and figure out how do we want finance to work as a society. And, if there's like some sort of fraud occurring, why on earth would it matter if the fraud is about a commodity such as oil or a currency such as Bitcoin or a security such as Apple stock? What difference does it make? I just can't even comprehend. Why does it matter what it is? If you're committing fraud or there's some sort of scam, that's a problem. And then you get into like some other weird questions though, like in the security side, you're supposed to do all these sorts of disclosures and registrations and ask for permission, not for forgiveness for this stuff. And that's almost like preemptive stuff where you haven't even done anything wrong yet, and you're supposed to be meeting all of these requirements and having some standards to suggest what sort of disclosures maybe you should make. That's certainly interesting. But anyway, I just think it's time to really rethink. What are we trying to achieve here with this regulation? Are we trying to act to restrain human activity up front and prevent certain human behaviors and certain trades or certain assets from existing? Or are we trying to regulate and come to an idea of an understanding of what happens, after something goes wrong? And, this idea that, there is a little bit of an idea of, hey, the regulators should stop the financial markets from collapsing or something.
Mm-hmm.
But, I don't even think that's a capability anyone has. I don't think you can have an authority figure that is endowed with this ability to stop a market from crashing or to roll back time and make something not happen that did happen. So what are we really trying to achieve here, right? And I think especially in the cryptocurrency industry, there are a lot of scams and there are a lot of fraudsters out there, and I think we just need to have a more comprehensive understanding of how are we going to approach this. We can't have a society that rewards fraudsters. When you have selective enforcement, I mean, there's very good reasons to have selective enforcement where a prosecutor can, take pity on someone or whatever. But when you have selective enforcement against fraudsters, you actually are creating almost a perverse financial incentive to be a fraudster, which is not good for making I don't know if you've heard the saying, like, human society is like a garden and you're welcomed into the garden and there are certain rules of the garden. But meanwhile, we have these actors just like navigating the garden by like jumping over walls that wasn't intended.
Your answer reminds me of one other thing that I wanted to ask you. So I've tweeted this before, and you know this even better than I do. It's like humans, like, we have the ability to write software faster than bureaucrats can like write lines of like regulations. Like, and what your answer also makes me think of, or what I would maybe think that you believe is like, and it's also easier to get the software like accurate than it is to get the like regulations like accurate. What's your reaction to that?
I don't know. I don't know. I mean, first of all, can bureaucrats produce legalese at an impressive rate? I'm pretty sure they could. They don't, thankfully. I don't know. I think at the end of the day, there's like no free lunch, and the problems of creating secure, verifiable, correct software are
Hmm.
quite hard,
Hmm.
and the problem of creating rules for regulating human interaction that are clear and
Hmm.
principled and stand out to certain principles is also very hard.
Hmm.
And in fact, that's why we have the three body system in the United
Yeah.
States, where we have different parties overseeing other parties and trying to regulate it on an ongoing basis, right? Because you
Yep.
can't even set up the whole system up front. And we've decided that the way to do it is an ongoing thing where we try to resolve issues as they come up. So I don't know. I mean, I'm definitely more on the software side, and getting stuff correct is very, very difficult. And I can only imagine that getting stuff correct on the political side is also extremely daunting.
Hmm. What would you say to, or what's your advice to any like young people thinking about going into software development, even outside of Bitcoin? Or you can bring in Bitcoin, but I just want to ask you is like, like software is eating the world. Like software is involved in everything. Just all of computer science up to this point. What are your thoughts for like young people and also like parents of young people thinking about the future of just education and things like that? What would you say to
Well,
young people?
at a very high level, I would say that programming is a new form of literacy. And in the forthcoming world, you're not going to have to be a developer, but you should have some literacy of programming. And the literacy of programming is really the literacy of using computers. They're very related. If you can use a computer, you can tell a computer what to do, whether by clicking buttons or typing commands. And so having some exposure to programming in some capacity, I think is highly, highly important. That doesn't mean you have to go and become a developer or whatever. But just like people who read books don't have to become authors, right? I mean, you read
Hmm.
books for pleasure or for other reasons to learn things, but
Hmm.
that doesn't mean you have to become an author.
Yep.
So I would definitely say, like, think of programming as a new form of literacy. Yeah.
Yeah. All right. So to wrap up the show, what is a Bitcoin product or service that doesn't exist yet that you wish did exist?
When you asked that question, I went and looked through my list of projects. I have a whole list of, here are things that don't exist that really should exist. And one thing that I think you'd be interested in is, I think we're at this point where, like, we don't really have bare assets for stocks or securities anymore,
Mhm.
but we can imagine we could get there at some point. But in the meantime, what do we do? And so one idea is, it would be possible to make a platform that does verifications of stock ownership in the same way that Yodlee, or what's the other one, the ones where they take your password and they log into your bank account to do your authentication.
Mhm.
Well, anyway, Yodlee was one of them, and there were a few others. Um, Doing that with stock portfolios would be able to have some platform sign off and say, "Hey, you own these 5 stocks," and you can kind of convert it to, it's not quite bearer, but you can still like display them or do other operations based off of that data. And I think that would be an interesting project to try.
Perfect. Perfect. Bryan, really appreciate your time today. Thanks so much for just talking to us and the audience. Where can people find you?
Yeah, find me on Twitter, twitter.com/KANZURE. And you can check out Webcache at webcache.org. And you know what? In the chat over here for this video, I'm going to just paste some Webcache. Here's your demo. And
Perfect.
in a blink of an eye, you missed it, but I just sent him some Webcache.
Love it. Thanks so much, Bryan. All right, we'll catch you guys on the next one.
Hey all, this is Bryan. You can reach me on Twitter at Bryan Harrington. Shoot me a DM with any feedback from today's episode. This has been a Choice App production. Bitcoin is becoming centric to personal finance, and we want to help you learn how to better engage with Bitcoin financial services. None of this is financial advice and is for education and entertainment only.